Good morning, Iggy. I'm excited to dive into something that's really caught my attention lately. UOBK Hian's AlphaPix portfolio has been making waves with some impressive performance numbers in July. Could you break down what happened and why this matters for investors like us in Singapore?
Hey Ivana, good to see you. Absolutely, this is a fascinating development to discuss. As you know, I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth here at the Investing Iguana. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 60,000 likes. I've produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also focus on regional and global economic trends, so this topic is right up my alley. The UOBKH Hian AlphaPix story is really quite remarkable. Their portfolio delivered a stunning 17.7% gain in July on an equal weighted basis, absolutely crushing the STI's 5.3% performance. Even on a market cap weighted basis, they still outperformed significantly with 6% versus the STI's 5.3%. What makes this even more impressive is that this happened while the STI was hitting record highs.
That's incredible performance. What drove these gains? I'm curious about which stocks were the standout performers.
The performance was driven by three key stocks that just went on a tear in July. First, we had iFast Corporation, which surged an incredible 37.3%. This fintech wealth management platform reported stellar second quarter results, with net profit jumping 37.9% year over year to $22.11 million. Their Hong Kong pension business is really taking off, and they're seeing record high assets under administration of $27.2 billion. Then there's Franken Group, which gained 33.9% in the month. This semiconductor equipment manufacturer is benefiting from the global AI boom and the insatiable demand for advanced chips. They're reportedly a key supplier for components in the most advanced lithography machines used to produce 2-nanometer chips. The third star performer was China Sunshine Chemical, up 28.4%. This specialty chemical producer supplies rubber accelerators to major tire manufacturers worldwide, and they're seeing better than expected pricing and volume outlook. What's remarkable is that there were no underperformers in the UOB Hian portfolio during July. That's the kind of stock selection that separates professional fund management from random picking.
The MAS's $5 billion capital injection seems to be a recurring theme here. How is this program impacting these stock selections?
You've hit on something absolutely crucial, Ivana. The Monetary Authority of Singapore's $5 billion equity market development program is reshaping how investors think about Singapore stocks. This isn't just throwing money at the market, it's strategic capital deployment designed to improve liquidity and broaden participation, especially in small and mid-cap stocks. UOBK Hian has positioned their portfolio brilliantly for this. They note that 10 out of 14 stocks in their portfolio are non-index stocks, which puts them right in the sweet spot for this capital injection. The program specifically targets undervalued small and mid-cap companies with strong governance credentials. 3 fund managers have already been appointed: Avanda Investment Management, Fullerton Fund Management, and JP Morgan Asset Management, with an initial $1.1 billion deployment. More managers will be announced by the fourth quarter, and the focus is clearly on companies that can benefit from improved liquidity and institutional backing.
Let's talk about the new additions to the August portfolio. UOBK Hian made some interesting choices: Hong Leong Asia, Marco Polo Marine, and CSE Global. What's the rationale behind these picks?
These 3 additions tell a compelling story about different sectors hitting their sweet spots. Let me walk you through each one. Hong Leong Asia was added specifically for construction sector tailwinds. With about 20% market share in Singapore's ready-mix concrete market, they're perfectly positioned for the massive infrastructure boom we're seeing. Think about it. We have Changi Airport Terminal 5 construction starting, Marina Bay Sands expansion, and multiple MRT projects in the pipeline. In Malaysia, quarterly construction work completed reached RM2.9 billion in Q1 2025, up 16.6% year over year, marking the 13th consecutive quarterly improvement. Marco Polo Marine is all about timing in the offshore vessel market. They're set to benefit from high charter rates and vessel utilization in the second half of 2025. Their commissioning service operation vessel is scheduled to begin charter in the first half of FY 2025, tapping into the offshore wind market expansion in Asia. The supply-demand dynamics are favorable. There are only about 10 Tier 1 commissioning service operation vessels operating in Europe with another 30 on order globally. CSE Global rounds out the trio with a robust and growing order book. They just secured a $46 million contract extension in the US data center market with a hyperscaler client. This is exactly the kind of mission-critical infrastructure play that benefits from AI and cloud computing demand.
You mentioned earlier that iFast and Sheng were removed from the portfolio. What's the strategy behind taking profits?
This is textbook professional portfolio management, Ivana. UOBKH Hian removed iFast after a 40.7% gain and Sheng after a 19.3% profit since their additions. This isn't about these being bad companies, quite the opposite. iFast just reported excellent results and raised their dividend by 33%. But here's the thing about active portfolio management. You need to balance holding winners against taking profits to fund new opportunities. With the MAS capital injection coming, UOBKH Hian wanted to rotate into companies that are more directly positioned to benefit from this specific catalyst. Fast, being a larger, more established fintech company, might not see the same proportional boost from institutional capital injection as smaller, less liquid names. Meanwhile, the three new additions, Hongliang Asia, Marco Polo Marine, and CSE Global, are smaller companies in sectors with clear, near-term catalysts. This is the detailed breakdown we've actually covered with much more specific data and analysis on our Substack. For anyone wanting to dive deeper into the individual company fundamentals and technical analysis, that's where you'll find the comprehensive written breakdown.
Looking at the broader market context, the STI has been on an incredible run, hitting record highs. How sustainable is this momentum?
The STI's performance has been remarkable, hitting multiple record highs throughout July and reaching above 4,200 points. What's driving this isn't just speculation. There are fundamental factors at work. The three major banks, DBS, OCBC, and UOB, make up over 50% of the STI, and they're benefiting from the higher for longer interest rate environment. OCBC just reported $370 billion in first half 2025 net profit, albeit 6% lower than the record previous year, but they're maintaining strong margins and declaring a 41-cent interim dividend. But here's what's really interesting. The momentum is being driven by more than just the big banks. ST Engineering is up over 110% year to date. Singapore Telecom gained 40%. And we're seeing broad-based participation. The key sustainability factor is the MAS capital injection program. This isn't a one-time event. It's a multi-year commitment to strengthen Singapore's equity markets. Combined with the robust IPO pipeline and improving regional economic conditions, I see this momentum having legs into 2026. However, investors need to be selective. The easy money has probably been made in the large caps. The real opportunities now are in the small and mid-cap space where the AlphaPix strategy is focused.
What should investors be watching for in the coming months as this MAS program rolls out?
There are several key milestones that smart investors should be tracking closely. First, the next batch of fund manager appointments is expected by Q4 2025. This could bring another wave of capital deployment and potentially expand the universe of beneficiary stocks. Second, watch the actual deployment pace. The three appointed managers have committed strategies that focus significantly on small and mid-cap allocations. As this capital actually flows into specific stocks, we'll see which names get institutional backing. Third, earnings season is crucial. Companies like Hongliang Asia are expected to report on August 12th, CSE Global on August 13th, and China Sunshine on August 13th as well. These results will validate whether the fundamental stories supporting the stock selections are playing out. But here's my key insight. This isn't just about picking individual winners. The MS program is fundamentally changing the liquidity dynamics of Singapore's equity market. Companies with strong governance, clear growth stories, and reasonable valuations will benefit disproportionately. The smart money is positioning ahead of this institutional flow, exactly what UOBK Hian is doing with their AlphaPix strategy.
Looking at the Malaysia component of the AlphaPix, how did that perform, and what's the strategy there?
The Malaysia AlphaPix actually outperformed even more dramatically than Singapore, Ivana. The portfolio gained 5.6%, while the Kuala Lumpur Composite Index fell 1.3% in July. That's nearly a 7 percentage point outperformance. Construction, building materials, and property sectors were the biggest winners, which aligns perfectly with the infrastructure spending theme we're seeing across Southeast Asia. Only 2 stocks saw negative returns: Zetrix AI down 7.4% and Duo Pharma Biotech down 1.5%. For August, they've made one key change, replacing Duo Pharma Biotech with RHB Bank. The rationale is that RHB Bank is a defensive, high-yielding play that should pare back some year-to-date losses. More importantly, they're positioning the portfolio for Malaysia's recently struck trade deal with the US, where Malaysian imports will face a 19% tariff rather than the higher baseline rates. This is actually quite strategic. While everyone focuses on tariff headwinds, Malaysia might benefit from trade diversion effects if other countries face even higher tariffs. The portfolio includes companies like Gamuda for infrastructure, Inari Amertron for technology, and Eco World Development for property, all positioned to benefit from Malaysia's relative competitiveness.
What's your personal take on this AlphaPix strategy and how everyday investors can learn from it?
This is where I get really excited about what UOBK Hian is doing, because it demonstrates several key principles that any investor can apply. First is the power of thematic investing. Instead of just picking individual stocks, they're identifying macro themes. The MAS capital injection, construction boom, digitalization, renewable energy transition, and then finding the best companies positioned for these trends. Second is the discipline of profit taking. They sold iFast at a 40.7% gain and Sheng at 19.3%. Many retail investors struggle with this. They either sell too early or hold too long. Professional managers take profits systematically to fund new opportunities. Third is sector diversification with size focus. Notice how their picks span real estate services, Propnex, technology, CSE Global, marine logistics, Marco Polo Marine, building materials, Hongliang Asia, and financial services, OCBC. But they're deliberately tilted towards small and mid caps where institutional capital can have maximum impact. My rating for this strategy is a strong buy for the concept, even if individual stock selection varies. The key insight is that Singapore's equity market is undergoing a structural shift with the MAS program. Investors who position for this early, like UOBK Hian is doing, should benefit from the improved liquidity and institutional participation. For retail investors, consider this. Instead of trying to replicate the exact picks, understand the framework. Look for quality small and mid-cap companies with strong governance, clear growth catalysts, and reasonable valuations. That's the sweet spot where the MAS capital will have maximum impact.
Iggy, that was incredibly insightful. Thank you so much for breaking down the UOBK Hian AlphaPix performance and the broader implications for Singapore's equity market. I certainly learned a lot about how professional fund managers think about positioning for structural market changes, and I'm sure our viewers did too. Before we wrap up, for those who truly value this level of insight, what's the best way for them to stay ahead with the investing iguana?
My pleasure, Ivana. It's always great to discuss these crucial market developments and investment strategies. For those who are serious about getting ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get my detailed analyses and urgent insights on market moves directly to your inbox, giving you a significant head start. It's just $3 a month, about the price of a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions delivered before the masses. If you're ready to join the inner circle and get that early edge, just click the link in the description below to become a premium member today.
Absolutely. Thank you, Iggy, for providing your insightful analysis of the UOBK Hian AlphaPix strategy and the transformative impact of Singapore's equity market development program. I look forward to our next video podcast together.